punctuated by the conflict in the Middle East. Labour markets in major advanced economies continue to remain tight, prompting central banks to maintain higher for longer stance. The International Monetary Fund, in its October 23 update of the World Economic Outlook, kept the global growth forecast unchanged at 3% in 2023, same as it was in July 23 update. Growth in 24 is, however, projected to be moderated at 2.9%, as a stronger than expected momentum in the US is likely to be more than offset by weaker than expected growth in the euro area and China. Against this backdrop, the outlook for the domestic activity is brightening on account of the sustained buoyancy in services, consumer and business optimism, public spending on infrastructure, and the underlying strength of the financial sector's balance sheet, even as the corporations deleverage and post strong bottom lines. Consumer confidence has improved with uptick in most of the macroeconomic conditions. Overall, the credit ratio of ICRA assigned rating was 2.0 in April to August 23, indicating improved credit quality of India Inc. Rating upgrades were strong in the hotels, auto components, financial and the transport and infrastructure sector. Growth is expected to gain momentum through the rest of the year, especially from the impetus of festival spending. High frequency indicators showing acceleration increase in quarter ending September 23. GST revenue remains robust as monthly GST threshold has now increased to 1.66 trillion in April-October 23 as compared to 1.5 trillion in financial year 23. On the external front also, the current account deficit is modest, with sufficient foreign exchange reserves providing a strong buffer that is insulating the economy from global spillovers as well as from the slowdown in the external demand. While recognizing global risk and the volatility in the financial market that they entail, real GDP growth is expected to be 6.5% in financial year 24. On the banking front, bank credit growth remained strong in first half of financial year 24 in tandem with the economic activity. Credit extended by the scheduled commercial bank rose by 19.3% YOY as on 6th of October 23, over and above the growth of 16.7% a year ago. As demand for credit continues, we expect credit and deposit may grow by 16 to 17% in financial year 24. In the above economic backdrop, let me now highlight a few key aspects of the bank's performance in the half year and the second quarter of financial year 24. I am pleased to announce that we have posted the quarterly net profit of 14,330 crores, which has increased by 8.03% on a YOY basis. Operating profit for the quarter 2 financial year 24 is at 19,417 crores, which has declined by 8.07% YOY. But there are reasons for that, which I will explain in my presentation. ROA of the first half of financial year 24 is at 1.10% and has improved by 34 basis points over the corresponding period last year. However, ROA for quarter 2 financial year 24 has moderated by 3 basis points on YOY basis to 1.01%. It has remained above 1%, which we had indicated a couple of quarters back. ROE for the first half of financial year 24 has improved by 649 basis points to 22.57% YOY, perhaps highest in the industry. Most other core profitability metrics have also improved during the current year. Net interest income for the quarter 2 financial year 24 increased by 12.27% YOY on the back of improvement in yields and continuing credit offtake. Domestic NIM for the half year ending September 23 is at 3.45% and has increased by 6 basis points YOY. Domestic NIM for quarter 2 financial year 24 stands at 3.43%. It has come down slightly as compared to the last year YOY comparison on account of increase in cost of deposit during the quarter. Non-interest income has increased by 21.59% YOY, mainly due to increase in the fee income by 10% YOY and profit on sale of investment Operating expenses have increased by 34.60% on account of increase in provision for wage revision at a higher rate of 14%, which have fallen due from November 22, as a result of which operating profit has also come down. As I mentioned, I will explain the reasons for operating profit coming down. So this is one of the reasons, one of the only and the major reason for reduction in the operating profit. On the business front, credit growth has been robust across all the segments. Domestic advances grew by 13.21% YOY, mainly driven by SME advances, which grew by 22.75% YOY. Retail personal advances have grown by 15.68% YOY. Agricultural advances also have grown at 14.76% YOY. Corporate segment advances grew by 6.62% YOY. And the deposit grew by 11.80% YOY, driven by the growth in current account deposits and term deposits. Our foreign offices have continued to perform well, with the growth in advances at 8.11% YOY, as well as in deposit at 14.57% YOY. Our foreign office advances have crossed an important milestone of 5 trillion Indian rupees. With regard to the asset quality, our gross NPA ratio has improved by 97 basis points YOY and stands at 2.55% and continues to be at its lowest level in more than 10 years. Our net NPA ratio has also improved by 16 basis points and now stands at 0.64%. Slippage ratio for the first half of financial year 24 has improved by 16 basis points YOY and stands at 0.70%. Consistently improving asset quality is also reflected in our credit cost, which is at 0.22% and has improved by 6 basis points on a YOY basis. PCR including OCA improved by 39 basis points YOY and stands at 91.93%. Herein I would like to add that our corporate PCR, corporate book PCR is at 99.55%. PCR for Q2 of the financial year 24 has also, it stands at 75.45%. On the restructuring front, our total exposure under COVID resolution plan 1.0 and 2.0 now stands at 20,854 crores as at the end of the second quarter of financial year 24. The restructuring book has behaved well, with 20% of the current exposure falling under SMA 1 and SMA 2 category. We are holding sufficient additional provision against the restructured accounts. The bank remains well capitalized. We have sufficient headroom to take care of the normal business growth requirements. Our capital adequacy ratio has improved by 77 basis points YOY and now stands at 14.28%. CET1 ratio has also improved by 41 basis points to 9.94%, and both the ratios are well above the regulatory requirements. Digital continues to be an important customer acquisition engine for the bank across asset as well as liability products. During the quarter, we have sourced 61% of the savings account and 39% of the retail assets account digitally through YONO. We are seeing increased traction in cross-selling business through YONO. We have recently launched YONO for every Indian, in which customers of other banks can also now access and experience the seamless UPI journey on YONO. Nearly 25 lakh registrations have been done during Q2 of the financial year 24 on this particular product since its launch on 1st of July 23. Advances wages through analytical leads has also grown 38% on a YOY basis in the first half of financial year 24. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders and most importantly for the customers. Most of our subsidiaries are leaders in their respective segments. We will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of State Bank of India. To conclude, I thank you all for your continuous support to the bank. Being proxy to the Indian economy, we consider it as a privilege to be able to contribute towards the growth of our economy. We remain committed to rewarding your trust in us with sustainable returns over the long terms. I wish everyone here the best of health and happiness in this festive season. My team and I are now open to taking your questions. Thank you.
Thank you very much, sir. Now we move to the question and answer session with media. To ensure seamless flow of the session, we will move from your right to left. Everyone will get an equal chance to ask a question. You may raise your hand and ask your questions, advising your name and media house you are representing. We request you to please follow the format and restrict yourself to 2 questions at a time.
Sir, I'm Sangeeta from Economic Times. Wanted to know what is the outlook for credit growth in the second coming quarters?
Normally, this is going to be a busy season, and normally in the busy season we see an uptick as far as the credit growth is concerned. So I think I would say that as I've been maintaining in the past also, we expect to grow somewhere around 13 to 14%.
Which sectors are you seeing?
So we are seeing growth in all the sectors, as I have described, right from the retail to the SME to agriculture. All sectors are seeing the growth. Bit of a muted growth. It's not really muted growth. I would say that about 6.61% growth which we have seen in the corporate book. That also it is the actual availment of the limits. If we look at the sanctioned limits and then the underutilization of the already sanctioned limit, that number would be somewhere around 3.5 to about 4 trillion already. So I think I would see that I would expect that some part of availment will also start happening, and that will help us in improving our growth in the corporate book as well.
So the other thing is on the restructured loans and the slippages. Could you give a broader?
I think I would say that as far as the slippages on the restructured are concerned, the behavior is much better than what we expected. And if you really ask me, the kind of provision which you are holding for that restructured book, we are holding provision at 30%, which is much on the higher side than what we will actually be consuming.
The slippages has come from which sector?
Slippages in general, what we have seen is that it comes from SME and agriculture, but there our improved underwriting processes have helped us in containing those slippages to a greater extent, and that is something which you have already seen in the results also.
Sir, I want to know your outlook on unsecured loans. Recently, UBS also came out with a report saying that there is a greater probability of delinquencies on your unsecured portfolio. So where would you like to cap it?
I would say that perhaps, there is a need to have a granular understanding of what kind of an unsecured loan different banks and NBFCs are offering. For us, I think it is not a concern at all. I have said it in the past and I still maintain my stand that our unsecured book is better than the secured also. If we really look at it, about 86% of our unsecured book is given to those who are maintaining the salary accounts with us, and they are all from the government sector. And if at all we will look at the government sector, armed forces, paramilitary and public sector entities, this number goes up to 94%. Just about 6% of the people are there who have been offered the unsecured loans, and that also is to those who are the well-rated corporate, where actually the salaries are very high. So I think as far as unsecured apprehensions are concerned in the mind of many, there is nothing. I can only say this much. And if at all you look at the gross NPA in the unsecured book, it is only at 0.69%. So I think I can perhaps this is the kind of a color which I can provide to really allay the fears of many which people have about the unsecured book.
You also said advances through a lot of your analytics, through your digital channeling, that's also growing. So these are what kind of loans? These are personal loans or?
We are offering pre-approved business loan, we are offering pre-approved personal loans,
and top-up loans for
and also we are offering top-up loans to the to our mortgage loan loanies. Yeah.
Your personal unsecured portfolio, the total loan is around 6%. That's what I'm saying.
Our unsecured loan book is at about 3.20 trillion.
Of that, below 50,000, because that is where
I don't think we have any. We don't have any.
negligible.
It's an insignificant number which is there.
We request everyone to stick to 2 questions so that everyone can be accommodated.
Yeah, actually, let me clarify about 50,000 which is there. That is only the balances have come down to 50,000, not that we have sanctioned to those people at 50,000.
Richard from Informist.
Sir,
Richard from Informix. Hi sir, this is Amol here from IndieBF.
I am unable to answer unless and until.
No, one by one we get.
Yeah, please.
Sir,
call you.
Richard
And
from
two
Informix.
questions at a time. Then we
Sir,
go.
your provisions net of write back shows only 1.15 billion. So just can you throw some light on that? What are the write back you did in this quarter?
Saloni, would you have some color? I have not.
We have done some like that specific accounts we have written down. Two large accounts we have written down.
Some specific accounts which we
Yeah.
thought at a particular point of time that they required some kind of provision on account of some of the stipulations. Now those accounts are
Now those accounts are performing much better.
so that is why we have
Sir, then those provisions should be reflected in the provision for NPS.
No, they are standard accounts. We have taken a write back
Actually,
from the standard.
let me share with you as a matter of prudent practice. Now we have started providing for even for the standard accounts also wherever we are perceiving that there could be a reason for us to provide for at a future date.
So those are provisions for standard accounts.
Yes, yes.
Then
City from Reuters.
Hi sir, I want to understand what is your corporate lending pipeline? What does it look like? What are the disbursals and sanctions?
Corporate lending pipeline is, as I mentioned, about 3.5,
4.77 lakh.
Huh? 4.7.
4.77 lakh.
4.77 trillion is the.
Sanction and disbursement put together.
So if you could give me a breakup also, sorry. Sanction is
I think about 1.5 trillion is something which is awaiting disbursement, and the remaining is the proposals under consideration for the sanction.
So next would be your outlook on NIMs. I mean, they have shrank QOQ and YY.
I think our effort is to stay around these levels only, and hopefully we should be. And maximum, I don't expect that. I think last quarter I had mentioned that we will be having these NIMs within 10 basis point, but we have kept it within about 5 or 6 basis point
So
of that.
lesser than that. 3
Three-
bips. 3
3
bips
bips
YOY.
3 bips YOY reduction is seen. I think it would be, I don't expect, because the only reason why this will probably be seen is that we have repriced our fixed deposit to some extent, only in one particular bucket. That is essentially to take care of the depositors' interest, and that is the only portion of our liability book which will have its impact on the NIM, which I expect should not be more than 3 to 5 basis points.
So 350 to 60 range, should that work?
Ankur from ET Now.
Hi sir, I wanted to understand about the employee costing. You mentioned that is the reason why operating profit is looking down. Can you provide the exact number in calculation? It is coming around 6,400 crore. Is that?
No, I will share with you what has happened is that we have done the wage revision provisions of about 3,417 crore. Actually it has gone up by about 3,417 crore. It was 1,494 crore in the first quarter. Now we have made provision of 4,911 crores. The other aspect is relating to the lower MTM write back by 2,536 crore. It was 2,835 crore write back which we had in the first quarter. Now it is only 299 crore, which is essentially attributed to the yield movement. So if at all we reckon both these elements, it is actually about 5,953 crore. In addition to that, we have done some additional provision for the pension liability also, because as per the recommendation of the actuary, which is as high as about 2,900 crore. So these are some of the major one-offs which have happened, and I would say that that is the reason why perhaps the results cannot be compared on a quarter-on-quarter basis also, or on a year-on-year basis, because these are the one-offs. And I expect that by the time the wage revision will have a clear visibility, we will probably be will be in position to provide for whatever is the additional impact on the P&L of the bank.
So in the quarters to come, it could also be write back kind of a thing.
There could be, if at all, whatever is the revision, if at all it will be lower than what we expect, maybe it could be right back also.
There could be more also.
It could be more.
Yes.
I think we have provided for now at 14%, and whatever else would be there, it would not be much.
So till now we have provided 8,895 crores. As
From
per-
November onwards,
from
we have
November
already provided.
22.
One answer I wanted on cost to income ratio, which you will be maintaining, and you are aiming to.
Actually, if at all we knock off these one-offs, then our cost to income ratio is 52%.
Okay, compared to 50% in the last.
So it is more or less in line with what we have been indicating in the past, but eventually our effort is to bring it down below 50.
Thank you so much. Joel from Economic Times. Thank you.
Sir, I just had a question on the provision. Is there a write back this quarter? See, on the NPA provision, we saw it's pretty low, but the provision number as such is still high. Is there a write back that you all got this quarter? Or
You already mentioned, no?
That's what I explained, no, on the
Yes,
provision on
explained.
standard assets.
It's the
Specific
same.
accounts.
Yeah.
It's the same. Okay. Other income is also down versus June. Is there something
No,
that was
June-
one-off in June? Because
June
year
quarter
on
we
year-
had the locker rent which was there in the month of April. Locker rents were there in the month of April, which was as high as about 750 crores. So that's actually that happens only in the month of April every year. So it's annual recovery. So that's the reason. That's the primary reason. But otherwise, if at all you will look at various other components of other income, which is loan processing charges, cross selling, all those incomes have actually gone up significantly.
Amol from BFSI.
So the fees income and the cross-selling income has gone up significantly. Any particular reason? Is it also because of the digital?
No, normally it is, see, in the digital itself, last quarter we had earned about 104 crore from the from the sale of these our subsidiary product. This quarter, this earning is as high as about 190 crores. So that is one of the reason. But we have got the physical distribution capacity as well as the digital distribution capacity, and we have normally seen that it starts slow in the first quarter, second quarter it starts ramping up, and peak normally we reach towards the third quarter and the fourth quarter.
So your corporate pipeline, specifically credit pipeline, looks really strong. But considering the geopolitical tensions, are you seeing some challenges from the corporate side? Maybe they are not accessing the loans which they have already subscribed for. And how do you see the overall maybe next 2 quarters considering the whole geopolitical tensions? If you could give us some sense on the global banking of yours specific range.
I think global banking, in fact, if at all I may share with you, we were just taking stock of the situation we have got a branch operation in Tel Aviv, and when we looked at the branch operation and we actually remain in constant touch, there it appears to be business as usual. They are meeting with the correspondents, they are meeting with the clients, so that is something which is there. But nevertheless, we are very mindful, we are very cautious in terms of the evolving global situation, and that is one of the reasons why in the first quarter we did not go whole hog for the growth in the loan book in the international book. Now we have understood the scenario, and we are growing essentially in the US, we are growing in Japan, and we are growing in Middle East. So these are the pockets where we are growing, and the growth which we have seen has essentially come from either ECBs or it has come from the trade finance in these geographies. So I think we expect that our international book we will have this kind of approach going forward, and we should be in a position to grow well in the international book. This is how we read the situation. But yes, of course, we are very mindful in terms of the evolving risk, and we ensure that we should not take any undue risk in the international book. And also your other question relating to the impact of the evolving international scenario on the domestic market, I don't really expect much of impact. And the reason why I am saying this is that the domestic demand is quite robust, and domestic demand being robust, corporates invariably look at the evolving demand situation, and accordingly they go for the availments. Availment, there is always a lag, particularly when it comes to project financing. There is always a lag in terms of when the proposals are sanctioned and when it is actually availed. There is always a lag, and also once it starts availing also, it will take its time to build up as well.
Piyush from Financial Express.
Hi sir. Sir, CASA continues to go down. What are we going to do? Raise rates anymore?
See, the point is that raising rate may or may not really help. The reason I'll just explain to you. CASA for us has come down by about 2.75 basis point. There are many other players in the market who have raised their rates, but they have witnessed the drop in CASA to the extent of 600 to 700 basis point. There is actually a behavioral aspect in this. What happens is that during inflationary conditions, there is generally a tendency of people to look at the products which can offer them the inflation neutral returns. So in that context, what we are doing is we are having an effort to increase our current account as compared to savings bank account. And we have witnessed an increase of about 8% on a YOY basis as far as the current account is concerned. And this has to be seen in the context of many of our competitors who have witnessed a drop in the current account. And this I'm sharing with all of you in the context that there is a remarkable change in the behavior of the current account. Earlier we used to have current accounts only of the government entities. Almost about a year back, there was a change in the business practices as far as the government is concerned. Now they are going to have the JIT, which is just-in-time funding, and that has almost dried up that potential for the CASA. So about 6 months back, we had started our transaction banking hub. We have already opened the transaction banking hub at about 34 such locations across the country, and that is one of the reasons why we are witnessing this kind of a current account growth. And I'm quite hopeful that our focused effort in this direction will help us in yielding much better results in the days to come even.
Sir, anything contemplated after your tenure extension on Yes Bank?
For whom? For me or for?
After your extension, anything on Yes Bank?
Yes Bank. Question you're mixing it.
Yes Bank is something which we are very closely evaluating, and we will have a deliberation at our board level. Once we will be at a position to share with all of you, we will certainly share with you.
Vishwanath from BQ Bank.
Hi sir. You said that you have no concerns with the unsecured portfolio to good question, but if you look at the loan growth on the express credit, that's about under 20%, which to me looked like something that was much lower than what it was in the previous quarter. I understand that the base is at 3.2 lakh crore. But having said that, is that sort of also part of your strategy going ahead? Or are you seeing some kind of lower demand from customers for personal credit?
No, see, normally we have seen that about 25 to 26% of our customer base has availed the loan. 26%.
Corporate salary package.
Corporate salary package customers have availed this loan. And also we have also aware that normally these people have got about on an average about 10% increase in the salaries. So with the increase in salary, their entitlement increases, and with the increased entitlement, they come back with the having a higher availment of the loans. So that is something which we have observed for some time in the past. I think we expect that we should have almost about 15-16% growth in this book, because when we are opening new savings account, this quarter we have opened about 34.
1,40,000 CSP accounts have been opened.
1,40,000 CSP account we have opened in a corporate salary package account. So which means that base will also go up, and also the existing customers will also avail. So we expect that we should be in a position to witness around 15-16% kind of a growth in this period.
The other question was with regard to some of your corporates not taking the sanction amounts. I just want to understand what is stopping them, because
no, actually, see, what happens is that corporates are very mindful in terms of paying their interest obligations. So one, of course, as I mentioned, that in any project between sanction to availment there is always a lag. So one part is that, and the second part is that they have raised sufficient equity as well. So first and foremost, they would like to deploy their equity. They want to undertake the interest burden only at much later stage. That is the reason why we are not seeing as high a growth which should actually be there.
So this delays the private capex?
No, they are spending the money, but they are spending from the equity side for the
or internal accruals.
Or from the internal accruals.
Preeti from Bloomberg.
So on just continuing with corporate advances, the share of corporate advances in your overall advances has sort of fallen. So maybe
That is the reason why because when rest of the book is growing at about 15, 16, 18%, and corporate is growing only at 6%, and also when it comes to even, for that matter, the international book is growing at about 8%. That is one of the reasons why the share of the corporate has come down as compared to the retail.
So, I mean, I understand the geopolitical challenges and how you're mindful of them, but we're also entering the election period. Do you expect corporate advances to sort of slow down in the coming months?
I don't really expect, because those people who have thought through the projects which they want to execute, I think they have kept this particular dimension in mind while evaluating the project and coming to the bank. And also, if I may mention, I think it's a well recognized fact that perhaps for a country like India, growth is a necessity, and wherever there is a visibility of the demand emerging, there are corporates who are there to feed that demand.
My second question, so there was a report earlier that a lot of lenders had met RBI to sort of tell them how their intervention in the forex market and their plans for debt sales were basically hindering the trading volumes at banks. I just want to hear your opinion on that.
Trading volumes of?
Yeah, trading volumes.
Of what? Of foreign exchange? We are not aware of it.
Not to my knowledge either.
Not to our knowledge.
That's why I said that maybe I may not have come to know about that.
We are not aware.
Please.
Mayur from the Times of India.
Thank you, sir. Sir, your open a branch in Sri Lanka, would it keep promoting because of the rupee, and in general, like, are you seeing any pickup in rupee denominated trade?
I think there is a scope for increasing the rupee denominated trade with our neighboring countries. I would say that there is a good potential both in Sri Lanka as well as in Bangladesh, and the corporate clients who are banking with us, as a matter of advice, also we are suggesting them maybe they can look at that. It would be a good opportunity. These are the early days. This is something. These are the concepts which we are talking about, and people have to develop the confidence in terms of how these kind of transactions should be done. So I think I expect that it should pick up.
And the question on wages, like, where would it settle down to after the 14% materialization? Is there a ratio that you're looking at?
No, in fact, we had done some exercise on that, but I feel that we should be in a position to eventually move towards what we were aiming for, to bring down the cost to income ratio below 50. That is always negotiated.
Hitesh from Indian Express.
I said, just want to know how are you seeing festive loan demand?
Well, when it comes to festive loan demand, we are, if at all, we can give some color based upon the kind of sanctions, increase in sanctions and disbursement. I would say that the pipeline is fairly robust. Both all kind of retail loans, right from mortgage, car loan, personal loans, there is a good traction on that particular front. If you can.
Slippages has increased in this quarter, so where are they coming from?
I think these are the small aberrations here and there, 5 basis point, 10 basis point here and there. But if you really look at our overall book, now it is much lower as compared to last. And even out of this also, this slippages almost are 50% of what it was in the last quarter. And that's what I'm saying. This slippage is much lower. And out of this also 3,832 crore also, about 1,200 crore we have already pulled back. So last quarter it was 7,659 crore. As compared to that, it is at 3,832 crore, which is at just about 0.46%. And even out of this also, 1,200 crore we have already pulled back after the close of the quarter.
Ram from Hindu Business Line.
Just wanted to understand, see, given that your capital position is around 14%, capital adequacy, will this be enough to support the loan growth that you foresee, 13 to 14%, as well as capital calls from your subsidiaries also?
We are not expecting any kind of a capital call from our subsidiaries in the first instance, because they are all very well capitalized, and some of them are actually low capital industries also. Now, when it comes to our ability to support, we can easily support the growth of 6.5 trillion with this capital. Let me also put in place the other aspect. We are not in a position to reckon the profit which we have already earned. As on 31st of March, we would be in a position to plow back a significant portion of the profit which we will earn in the year, and we expect that our capital adequacy will go even beyond 15% as on 31st of March.
So if we reckon the half-year profits, already the CAR is at 15.37% and the CET1 is at 11.03%.
Is there any kind of slowdown in your gold loan portfolio? Actually, I saw it will be a 0.5% growth.
No, there are reasons. There are reasons for that, because the kind of demand which we get to see is relating to the current account for the gold loan, which we are not interested to offer. But if you really look at it, our gold loan book today stands at about 1 trillion, which is highest than any of the gold loan company which is operating in the country, out of which about 70,000 crore in the agricultural gold loan and about 30,000 crore in the retail personal gold loans. So I think we are very mindful in terms of what all risk we should undertake, what we should stay away from.
Why also is 14.39%?
14.39% is the growth which I am told in the gold loan, but nevertheless I have just explained to you the philosophy which we are pursuing as far as the gold loan is concerned.
Abhijit from Business Standard.
You made reference to the geopolitical situation and the Israel. Another development happened on the Canada front, where you have also with the bilateral much higher level. What is the real impact of the kind of strain that we have seen?
I don't expect anything, and around the same time there was a SIBOS which was happening in Canada, and when I checked up from the participants who were there in Canada that what was the impact, they said it was featuring only as one of the small prints in the local media. So that itself is a reflection that how sensitive we are to such developments and how those countries are looking at such developments. So eventually I think I would say that it's not something which is really bothering us. We have got a locally incorporated subsidiary there in Canada, and they are doing fairly well. There is no challenge which has been reported to us, and though we are very closely looking at what's really happening in Canada also. And I think there is a very clear tendency. I hope that situations will improve there also.
The second question is that this quarter also saw one NBFC merging with the largest of the private bank. So that is an important factor. That's how you said that year-on-year growth is 19% from industry trading. What for this year, what is that between how we are managing or dealing with that scenario?
I think these are the realities and of the dynamics of market, and we very closely look at this and see to it that we stay ahead of the curve. There is no challenge for us. No, actually what is happening is that we also have got a plan of action. See, we already have got 22,400 plus branches now, and also almost about 40,000 CSPs.
79,000.
79,000 CSPs. Sorry. 79,000 CSPs. So when it comes to footprints, I think it's a very decent number which we have on ground. Apart from that, our focus on the digital, almost about 7 trillion worth the registered users for the YONO, is something which is helping us in reaching out to our customers. And I think, consolidation merger will continue to happen, but we keep on reading the situation and ensure that we should stay ahead. And we will open the branches also. It's not that we are not opening the branches. We are opening the branches wherever there is a potential. We are opening the branches also. This year we have got a plan to add up.
All right, so that was the State Bank of India management addressing the media after their second quarter earnings. The biggest takeaway is that, despite all of these concerns that have been flagged about unsecured retail lending, State Bank of India, the country's largest lender, says there is no concern whatsoever, at least as far as their portfolio is concerned. In fact, they say that a majority of the unsecured loans they've given out are to salaried customers which are employed with government agencies. So there is little to no concern on that book. That said, they have made adequate provisions on that front as well. They said the restructured book, which has also come down quarter on quarter, that is behaving better than they expected, and they're holding a significant 30% provision for that book as well. A bulk of the slippages that have come in for the quarter, according to SBI, have come in from the agriculture book, but there the management says they are tightening underwriting standards and they expect that to be contained in the quarters going ahead. On margins as well, it is along expected lines. The management had guided that they will be able to maintain, the margins at the current levels, and we've only seen about a 4 basis point dip in this quarter. Lastly, on credit growth as well, you had Dinesh Kara saying that the second half of the year typically sees a stronger credit growth, and therefore SBI is expecting a credit growth of 13 to 14% for the full financial year. So that is as far as State Bank of India's earnings are concerned. On that note, we're going to wrap up this special edition of our Earnings Central. Thanks very much for watching. Stay with CNBC TV18. More news and updates will continue after this break.
We will not offer any cashback, let me tell you. We will not offer any cashback. Don't worry. It is for Yes Bank model.